to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you from the Nasdaq market site in Times Square, New York City, with Mark Marex, Senior Director of Index Research and Development with Nasdaq Global Indexes, as well as Ryan McCormack, Factor and Core Equity Strategist at Invesco. We're here to discuss earnings quality, capex investments, and the impact of tariffs on the Nasdaq-100. Certainly, great to see you guys as always, Ryan. There's a lot to unpack here from the macro perspective, and the Nasdaq-100, despite its longer-term performance, is not immune to the headlines.
No, it's not. I mean, we were just talking. I think from the relative highs this year, I think it was on February 19th. We have QQQ is down 12.3%. I think Nasdaq-100 down in the same range, obviously, and yeah, not immune to the macro headlines. I mean, it's clearly we're seeing a little bit of a volatility spike here. We're seeing kind of risk off in terms of worries on supply chain, higher prices. And even in that time frame, the companies that have outperformed have been largely domestic focused, like a company like Kraft Heinz, or even some of the biotechs like Biogen or Amgen. Clearly it's on investors' mind, and that 12% decline, I think it shows that. Yeah,
well, but then you start talking, everyone was looking for more attractive entry points from a valuation perspective. So now it's starting to get a little bit interesting. And Mark, when you think about corporate performance, at the end of the day, Nasdaq 100 companies did perform pretty well.
Yeah, I mean, this is what is so strange talking about the index in the midst of a correction, which is the fact that, you would expect weakness in earnings to sort of give you early hints that something is brewing, some sort of trouble is brewing, whether it's an earnings recession or a growth scare or something like that, but we didn't see anything like that this past quarter. Earnings season is basically over. Year-over-year EPS growth for the index overall was 24%. That is an insanely good level of year-over-year growth to show in earnings. And it came in above expectations because you had companies like Amazon and Meta beating estimates by over 20% each. These are massive companies that are way outperforming on what all the analysts on the street were pricing in going into this quarter. You had a bunch of other names also outperforming to a lesser extent. Of the NDX megacaps, it was really Tesla that disappointed. It was the only one to miss on EPS this quarter. And when you look out, a year from now, we're still pricing in 16, 17% EPS growth for the index over the next year. That is a very, very strong fundamental backdrop that now is clashing with a macro uncertainty backdrop. And when you think about valuations, right, the reason the valuations are coming down is not because earnings are coming down, but you're introducing uncertainty into that earnings estimate. Right. So you could get the drop from earnings dropping or increasing uncertainty. That's what we've got right now.
Right. So, I mean, of the two, I'd rather have the macro uncertainty than a fundamental issue on the company level. I would imagine too, Ryan, forward guidance has also been challenging because the operating environment, we're still trying to figure out what strategies and policy is going to look like.
Yeah, 100%, right? And I think that's really been the story now for the past 5 years, right? We've come up to a number of different periods of uncertainty where it's made guidance difficult. Now, at least recently, right, we saw kind of the last two mega caps, or the last two sort of top of the heap of the Nasdaq 100 report, and that would be NVIDIA and Broadcom. And both, I think, surprised to the upside on guidance for this upcoming quarter. So it isn't like the guidance is falling apart either. The story remains of pretty robust capex investment. The story for a company like NVIDIA, like in Broadcom, it still remains pretty solid. So, I think that clash is really an interesting one to see because, as Mark had said, the fundamental story of these companies remains very much intact.
And they certainly do, but you just launched a new QQQ product in Hong Kong, so it's not even just domestically. Internationally, they're seeing the values of the constituents of the Nasdaq 100.
Yeah, absolutely. I mean, this is my second time there in 2 years, and this time a little bit different in that we were cross-listing QQQ, but a ton of demand and attention around that. I think not only does it kind of speak to the growth potential that we see in the Asia Pacific region, but also from their side the desire to get access to these leading innovative companies.
Yeah, and you know what, Mark, I also thought it was interesting, the DeepSeek news. Outside of the macro environment, I thought the index digested it relatively well.
Yeah, I mean, it feels like kind of eons ago at this point, but there was a scary moment towards the end of January, especially that Monday following the weekend when sort of everyone was freaking out. Is this a Sputnik moment? et cetera, et cetera. I think we all kind of now understand a lot of that hype was overdone. And some of the numbers that were being floated around by DeepSeek, like 6 million to train the whole thing, was pretty misleading. But yeah, the index held up great. You mentioned, the two names that Ryan mentioned, NVIDIA and Broadcom. Those were the only two names in the index that really took it on the chin that week, because they're the ones that investors started to think all of a sudden, okay, is this capex story potentially going to be not as strong for the two major suppliers of AI-related chips, NVIDIA in terms of standard GPUs, Broadcom in terms of their ASICs, their custom AI chips that they're building for the likes of Google and Amazon and Meta, right? The index as a whole, I think, was down 1.2, 1.4% for the week, and you had names like Apple and Meta that were up 5, 6% for the week, because at least from their perspective, if they don't have to spend as much on chips, that's earnings accretive potentially, right? And if you have cheaper AI models able to run on device, on an iPhone, for example, maybe that boosts the demand for iPhones. So that's what we saw from DeepSeek in the short term. Overall, broader picture though, the capex spending plans on track for $300 billion this year. And every single of the four major spenders, Google, Microsoft, and Amazon, the three hyperscalers, plus Meta, upped their capex forecasts this past earnings season, despite the DeepSeek news.
Yeah.
So they're saying, we're all in. It doesn't impact our view of how much demand is going to grow for all this AI infrastructure that we're building out.
And I'm glad you brought that up, because the story that we've been telling for years has been, Ryan, Nasdaq-100 companies invest in capex as a whole with the index more so than other constituents of different indexes. Hence the growth that they've seen, the earnings performance, and the performance of the index overall.
Yeah, absolutely. I mean, this is a story that is fundamental to their success, and we heard it when we were in Las Vegas at CES, right? Every company that we had on our panel talked about the importance of R&D, capex, reinvesting back into their company. I think when you take a step back and you look at the DeepSeek news, that's probably one headline in a sea of them over the next 5 years.
It would be naive to think that the NVIDIA team hasn't, thought about different scenarios of what a competitor would look like from that respect.
Of course, and I think if you look at the commentary across most of these executives, right, like overwhelmingly it was viewed as a positive, right? Any sort of advancement in terms of an LLM, there's going to be the next LLM that comes out, or an improvement to an existing one. Like, we're going to continue to see that, and ultimately driving costs down helps to promote wider adoption of the technology on the whole. And I think the Nasdaq-100 is very well equipped to handle that increase in demand.
Yeah, Mark, is the index reacting to tariffs in different ways than perhaps other indexes? Is there a specific impact that you're seeing in terms of a pattern with the NDX?
I mean, it's just really hard to quantify definitively, because we don't even really know where this tariff policy is going, right? What we do know for certain is that, at least relative to the S&P, the Nasdaq-100 has more international exposure than the S&P 500 does. More of their revenues are earned outside the U.S. However, relative to the S&P, more of their revenues are on a service revenue component basis versus true sort of physical goods, which is what most of the tariffs are targeting. There are exceptions to that. Electricity, I guess, is getting targeted a bit. But on the whole, I see this less impacting individual companies in the NDX in terms of them having to pay tariffs and then try to pass on those costs to consumers, versus everyone else is sort of getting impacted on a first order basis. And the second order is, okay, if these impacts are strong enough, if prices go up high enough, if that slows the economy down fast enough, then going into that at pretty rich valuations relative to history, because again, the earnings growth's been so good, it justifies a higher valuation when everything else is good on the macro side. But once that macro side starts to weaken, even if the earnings hold up, that uncertainty is going to drag down the valuations at least a little bit, and that's what we've been seeing.
Right, and that goes back to your point initially in the beginning, where it's not fundamental to the companies that you're seeing this drop in valuation. It's just macro uncertainty, which, Ryan, we know the market's always going to climb a wall of worry. But when I feel like when it's policy, whether it's fiscal, tariffs, electric, that blew my mind a little bit. I mean, how do you kind of triage that? it's kind of hard to separate your fundamentals from that.
It does, and especially, given that it does seem a little tit for tat. You never really know what you're going to get, like today, right? I mean, today's electricity announcement was a little bit of a head scratcher. So, I mean, it does seem to be kind of, the volatility continues to increase, I think, just because we never know what's coming tomorrow, right? And it's coming at such a rapid pace and the rate of change. So, I think ultimately it's just kind of holding on and seeing where the dust settles. I mean, the market doesn't like uncertainty, and I think, the last month of trading or so is certainly expressive of it.
But you know what, though, even through the 5 years of COVID, if you will, actually March 13th, that'll be exactly 5 years from our last day here. That went by really fast. Corporates did operate well through an environment that nobody had a benchmark to.
Yeah, no, absolutely, and I think it goes back to sort of the notion of capex and reinvesting in themselves, right? These companies have been investing in these AI-related themes for years, right? They're very well equipped to handle any sort of increase that comes on that side of the business. So, in controlling what they can control, I think they're very well positioned, and that's what we saw in COVID, like being able to switch completely to a virtual environment, like that was handled with really no disruption whatsoever.
Yeah, well, and a lot of technology that drives the capital markets, as an example, the resilience, Mark, of how the framework held up, to me, I think was one of the most impressive things that we saw.
Yeah, I mean, look, I think NDX during COVID, Nasdaq-100, demonstrated just how different of an index it is today than it was 10 or 20 years ago. It not only had lower drawdowns on the way down versus something like the S&P or the Dow Jones, but it had a sharper and faster recovery, setting new highs after that versus those other broader benchmarks. Because, number one, a lot of these big tech names are seen as safety defensive type plays in today's market when there is a spike in volatility, whether it's geopolitical related or fiscal policy related, whatever. They've established themselves as being a safety play. And then also, they are able to more quickly pivot to changes in the environment and pull different levers, whether it's driving higher revenue, whether it's getting more severe in terms of their cost control, to maintain that historical growth in earnings, in cash flow, et cetera, right? And so maybe that's what we'll see again this time is you have this central tension. The U.S. government really wants AI unleashed. They want the U.S. to be the global champion AI in terms of not just the best models being built and run here, but also the biggest, most powerful data centers being built. They're trying to onshore as much of that as possible. There's a central tension between trying to do that and trying to close yourself off to the rest of the world in terms of tariffs. But if that really is their priority, then I think you have to be somewhat optimistic that, again, NDX is going to potentially outperform in a period of volatility where other sectors are getting hit harder, more directly by tariffs. But there is this overarching story of you go into the crisis with fundamental strength, and at the same time, the government is saying what you're working on in terms of AI is the most important thing to get right over the next few years.
Yeah, it certainly is. And Ryan, to wrap up here, if you think about it, the generative AI story that came out in November 2022, that was the recovery in the market. It makes you think, if that wasn't the catalyst, would we even be close to the levels where the market is right now?
Right, no, I probably not, right? I mean, you look at kind of the growth and where that growth has been centered around, and it's those companies that were early adopters or could at least kind of like just champion the story forward, right? I mean, you don't need me to tell you we're still very much in the early innings of this story. But in terms of the early adopters, I mean, largely Nasdaq 100 related. And then, to Mark's point, you look at where, the massive investments that are being announced to kind of onshore, whether it be semiconductor manufacturing, whether it's wide-scale data center build-out, the numbers themselves are staggering, 500 billion at a clip in some cases. Yeah. So, you do kind of see this short-term pain potentially for long-term gain if, in fact, the U.S. is trying to make the government is trying to make the U.S. the epicenter of the AI revolution.
Well, always looking forward. That's what the index is about. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.